All right, welcome back to Worldwide Exchange. Mark Haefele and Carl Weinberg still with me. Mark, going to come over to you. We were just talking about it before the break. The jobs report's coming up later today. Looking at the estimates, the estimate is for 170,000 jobs, an increase over last month that was impacted by a number of factors. In your mind, how big of a market mover could this be if this jobs report hits the estimate or even exceeds it?
Well, I don't think that if it's above that, it's going to eliminate all the uncertainty out there. And of course, if it's below, the market may sell off. But this is just one data point. But obviously, people are really looking at this because it is kind of an important tell on some of the uncertainty levels that we've been talking about.
All right, so it's an important tell. So you're saying if it's under, it could be much more of a market mover. If it's under the estimate, in your mind, what's the tell? How do you respond as an investor?
Yeah, well, I think it fits into this narrative that the uncertainty that, is anecdotal or sentimental is starting to really show up in the data. So that's where a market that's already fragile might take that as an extra signal. I think, as I was saying, we try to hedge our equity exposure. We still, longer term, we like the AI theme. We like U.S. investments. More near term, we have been looking at and playing more short term in the DAX and also on China tech. Although when we get towards further tariff announcements in April, they may also come into question. Of course, in Europe, we have the additional factor that many people are hoping on lower gas prices and greater economic development out of a ceasefire in Ukraine. And that would certainly be a positive for a variety of reasons. Although how long that takes to get to lower gas prices in a sustainable way, that needs to be seen.
All right, so Carl, coming over to you, you're talking about a lot of these different economic reports. In your mind, what is at stake right now when it comes to this jobs report? We're hearing a lot of things come up that we haven't heard about in a few years: recession, stagflation. In your mind, what is this report going to tell us, and what's at stake when we're looking at the economy?
Yeah, so I think that from the point of view of the economy, we're looking at a test of whether or not employers are slowing their rate of hiring. There's no sign of layoffs. That's one reason why we could, get a drop in payroll employment. There's no sign of any change in the demographics. There's no sign of people quitting. But there is a lot of evidence in the Beige Book and in other surveys that we're seeing about companies cutting back on their rate of hiring, deferring that hiring decision until the dust settles down.
Wait, Carl,
and that's what I'm looking for in these
I hate to interject, but I mean, we just got a report from Challenger and Gray yesterday. Layoffs increased 245% in February over January. 172,000 layoffs, about a third federal layoffs, obviously part of the DOGE effort. So we are seeing layoffs tick up a bit.
Well, in that case, then we didn't see that in the initial claims numbers, but perhaps other surveys are telling that. I wouldn't be surprised to see layoffs picking up. But what I'm really looking for in this number is a slowdown in the rate of hiring to bring down the payrolls number. Now, for the market is looking at 140,000 increase in private payrolls. And just the other day, we got another survey-like report from ADP that said that number was only 70,000. I think, given what I know about the economy and what ADP told me, that all the risks to the payroll number today are to the downside of market expectations. And as Mark suggested, if we get a number to the downside, I don't know that financial markets will take that outcome lightly.